Credit sales should be debited to A, sales account, B, debtors account, C, cash account, and D, none of this. So let us understand the transaction. What happens in credit sales? At any cost the company is making sales, so the company is booking an income. Income should be credited. So first income will be booked. So to sales account credit. So this is income, so it is credited. Now whether the company is getting cash, no, it is not getting cash. It is rather creating an asset called debtors. So debtors are being debited because the company is not getting cash, rather it is creating the right to receive money on account of sales. So debtors are being added. So debtors account debit. So here which account is debited? The account which is debited here is debtors. Go back to question. Question says credit sale should be debited to which account? It should be debited to debtors account. So answer is B, debtors account. Capital introduced by the partner in the form of machinery should be credited to machinery account, capital account, cash account, none of this. Let's understand the transaction. What has happened is capital had come in from the partner, but instead of cash this partner had given machinery. So machinery had come in the form of capital. Capital is a liability, right? So it will always have a credit balance, and machinery is an asset, it will always have a debit balance. So debit what comes in machinery, and capital credit the giver of the benefit, capital whomsoever have contributed, that is the partner's capital. Fine. Now the accounting entry for this would have been machinery account debit to capital account credit. So here the question is, capital introduced by the partner in the form of machinery should be credited to which account? It should be credited to capital account. So answer is B, capital account. That's what we have done. Next question, rent outstanding should be debited to which account? Is it rent payable or rent outstanding or cash account? Understand the transaction. Rent is an expense, right? So first rent is an expense. Expense should be debited, so you will debit the rent, so rent account debit, and here the rent is not paid, so it has to be paid in future, so there is a liability. So you are creating a liability to rent outstanding. So what we have done here is we have booked an expense, that is rent account debit, and we have booked the liability also by crediting the rent outstanding. So what is our question? Rent outstanding should be debited to. Here we have debited the rent outstanding to rent account. So look at here, it is B, it is rent account. Rent account is the answer. Commission received, is it an income or expense or asset or liability? So what is the nature? The commission received is an income, it is not an expense. Expense will involve payout either now or in future. An asset is something which is going to give a future benefit, and liability is something where you have an obligation. So commission received is an income. Next question, rent paid is real, personal, nominal or representative. Now in which account we can classify? This rent paid can be called as an expense, is it not? It can be called as an expense. Since it is an expense, it can be classified under nominal account classification, which says debit all expenses and losses. So we can say rent paid account is nominal. Next question. Select the odd one out. We have insurance prepaid A, interest accrued on investment B, closing stock C, commission received in advance is D. So what is something common for all these items? Something which is common for all these items is all are adjustment entries. Fine. But what is something odd in one of the item? Insurance prepaid can be shown under asset. Interest accrued on investment can be shown under asset. Closing stock can be shown under asset, whereas commission received in advance is a liability. So this is the odd one because all the other three were asset. Commission received in advance is a liability. So this is the odd one out. Next question. Wages paid for erection of machinery rupees 25,000 should be debited to A, salaries and wages account, B, wages and salaries account, C, machinery account, D. Cash account. Let us try to understand this. See here, the company has paid wages of how much? They have paid wages of 25,000. But this wages is not payable regularly because it is paid only for erection of machinery. So it is not a recurring expenditure, it is rather a one-time expenditure. Now machinery is an asset, right? Machinery is an asset. So any expenditure incurred on the asset to make it operational will also be considered as part of the machinery cost. So the wages paid 25,000 for machinery for installing that asset should also be treated as part of the asset. So wages need not be accounted separately, rather it can be debited on the machinery. So the company need not pass entry for wages to cash. It is sufficient if they pass entry for machinery account debit to cash of 25,000. So here which account is debited? The account that is debited here is machinery account. So let's go back to question. Wages paid for erection of machinery should be debited to machinery account. So the answer is C. Depreciation on machinery rupees 10,000 should be credited to which account? Is it depreciation, P&L, cash or machinery? Let us understand. Depreciation actually brings down the value of asset, right? This 10,000 is going to bring down the value of asset, which is machinery. So when an asset is added, it would be debited, but when it is losing its value now, it should be credited. When it is added, it would have been debited, but now it is losing its value because of depreciation. So this machinery account would be credited. And what would be the debit? Debit would be for depreciation because depreciation being loss. So entry would have been depreciation account debit to machinery account. So let's go back to question. What does the question says? Machinery depreciation on machinery should be credited to. Which account is credited here? It is machinery account. So just see, do we have that? Yes, answer is D, machinery account. Fine. Under traditional approach, sales tax payable can be classified under real account. Can it be classified under real account? Real account talks about assets. Debit what comes in and credit what goes out. So it cannot be classified under real account. Can it be classified under nominal account? Nominal account talks about expenses and losses, incomes and gains. It cannot be classified under nominal account also. Personal account talks about three classification of personal accounts. What are they? One is natural, two is artificial, and three is representative. So the sales tax payable is something which is payable to an artificial person called sales tax department, right? So this come under artificial classification. So the answer is personal account. Next question, bank deposit can be classified under what? Is it real account? Because real account says asset, debit what comes in, and credit what goes out, and we understand bank deposit is an asset. But understand, the bank deposit is actually a money that is given to a bank, and bank is a person. Which person? Bank is an artificial person. So the bank deposit is the money, it is with a person or artificial person called bank. So which classification deals with person? It's basically the personal account classification deals with persons. So bank deposit can be classified under personal account. Next question, purchased goods from Mr. Kamal for rupees 10,000 for which he allowed a trade discount of 10% and a cash discount of rupees 100 for early payment. Purchase account should be debited by what? So there are four options. Before looking into the option, let us understand the scenario. There is a purchase. Okay, there is a purchase worth rupees 10,000. So on this 10,000, Mr. Kamal has given a trade discount of 10%. So there is a trade discount. So this trade discount would be probably available for all. So 10,000, 10% would work out to 1,000. So the amount actually payable or the amount which can be accounted as expense is only the balance, which is 9,000. Now on this 9,000, which is the actual payable or actual expense, what happens? They are going to get a trade discount. And what is the trade discount amount? Expected discount, or the discount which they have received, or received discount, is how much? Rupees 100. So on 9,000 they are going to get a discount of 100. Now understand, the purchase is worth 10,000, whereas they were asked to pay only 9,000. So their actual expense is only 9,000, and this 9,000 they have made the payment promptly, so they have received the discount of 100 rupees. So anybody who sees the account should understand that this company has been prompt in its payment, so it has availed a discount. This trade discount is not something unique to the company. This would be available for all who buys, but cash discount is something unique, and it should be accounted separately so that the benefit or the reputation of the company can be known. So what is the actual expense for the company? Is it 10,000 or 9,000? Answer is, it is only 9,000, because only 9,000 the company has got to pay. So we'll debit this 9,000 first. That 9,000 is for purchases, right? So we'll debit the 9,000. So it is purchases account debit 9,000. Now how much they have to pay? Come back here. See, 9,000 is payable, of which there is a cash discount of 100. So what is actually paid? Paid is only 8,900. So come back here. The purchases is 9,000, of which the payment has gone out is only 8,900, and there is a gap of 100. This gap should be recognized as income because it should be shown separately. So to discount received, it is credited because it's in the nature of income. Actually it's a set off against the expense, but this should be exhibited separately, so the cash management of the company can also be understood and appreciated by the user of the financial statement. So what we have done is, we have debited purchases, we have credited cash 8,900, and discount received 100. Now let's go back to question. What is the question? Purchase account should be debited by how much? Is it by 10,000 or 9,000 or 8,900 or 9,100? And what we have done, we have debited the purchase account by 9,000. So answer should be B, 9,000. Next question. Income tax liability of proprietor paid out of petty cash should be credited to drawings account, income tax account, cash account, and petty cash account. So let us understand. Here the proprietor has drawn money and it is paid out of petty cash. So when the proprietor draws money, it will be drawings account debit, and here the money is drawn out of petty cash, not the real cash. So the petty cash balance will come down. Petty cash is an asset, it will have a debit balance, but when its value comes down, it should be credited. So to petty cash account credit. Now the question is, which account should be credited? So income tax liability of proprietor paid out of petty cash should be credited to which account? What we have done is, we have credited to petty cash account. So answer is D, petty cash account. Next question. Staffs were given purchased goods worth 5,000 for Diwali, which shall be adjusted against their salary. The cost of the goods were worth rupees 4,000. Which account should be debited and for what amount? So let us understand this scenario, then we'll come back to the option. See, the company has given stocks worth 5,000 to its employees, right? To its employees instead of salary. So this stock worth 5,000 is actually the market value, the price which it could fetch in the market. Fine. But the real cost of this 5,000 is only 4,000. So the 1,000 rupees is the profit margin. Now this 4,000 is given instead of salary. 4,000 worth stock is given instead of salary. So employee's salary expense is accounted, right? Because 4,000 has been given, so employee's salary is accounted. So salary being an expense, it should be debited. So salary account debit, and it should be debited only for 4,000. And what has gone out now? What has gone out, or which balance is going to come down? Is it cash balance? No, because their salary is not paid in cash. Rather, the stock has been given. So how the stock will be recognized in accounts first? It will be recognized by debiting the purchases. The stocks will be recognized in accounts first by debiting the purchases. Now this balance is going to come down because of having given it as salary. So we would have debited the purchases when stocks were purchased. Now stock had gone out, so to that extent this account should be credited. So entry should be salary account debit to purchases account credit 4,000. So now we'll go back to the question once again. Which account should be debited and for what amount? And what we have done, we have debited the salary account for 4,000. Go back here. We have in option B salary account 5,000. We have purchase account 5,000. We have purchase account 4,000. But what is required for us is salary account debit 4,000. Is it there? It is not here in all the three. So the answer is none of this, because we know salary account should be debited for 4,000 and that option is not here. So answer is none of this. Next question. Goods distributed as free samples worth rupees 2,500 should be credited to which account? Is it advertisement or cash or purchase or sales? Let us understand. What happens when the company gives free sample? Why do they give free sample? Free samples are given for advertisement purposes. So advertisement, is it an expense? Yes, advertisement is an expense. So which account should be debited now? Advertisement being an expense, advertisement account should be debited. So this is the first leg. Now for this advertisement, whether the company had paid cash, is there any cash payment? Answer is no. What has happened? The company has given stocks. That is, the samples have been given. Now this stocks is taken from what? Is taken from purchases. When the purchase is made, it would have been debited. Now this purchase account is losing its value. It is coming down because stocks are given out as samples. When we make a purchase, we debit. Now this purchase is losing value because it is taken out for distributing a sample. So to the extent it is taken out as sample, it should be credited. So entry should be debit the advertisement account and credit the purchases account. So now we'll go back to question. Goods distributed as free samples worth 2,500 should be credited to which account? We have credited to which account? We have credited to purchases account. So we'll see, do we have that option? Yes, we have here. C, it is purchase account. Thank you.